Okay, peeps, welcome back. So today we're going to be going over the options chain and what that can further tell us about the upcoming crypto bull run. So with that being said, let's get it. Okay, so there's a few things I want to go over before we get into the options chain. So we had the CPI report today. The report itself came in a little bit lower than expectations. So the expectation for core, I believe, was 3.2. It came in at 3.2. And the expectation for headline CPI was I believe it was 2.7, and it came in at 2.6. Let me actually take a look at this real quick with y'all here on the calendar. Okay, whoops. This is actually I don't know why it went to Thursday. It's not Thursday yet. So anyways, yeah, so the expectation here for headline inflation was 2.6. It went down to 2.5. Core CPI, that did not change, which again, a lot of that is, as far as I know, a lot of that is actually tied to real estate. So, and of course, you guys know there's a bunch of illegal immigrants that don't belong here that are getting put up in houses and stuff. So that would explain why the core inflation, part of the reason probably why the core inflation is kind of a little bit harder for the Fed to get under control. So anyways, regardless, that's neither here nor there. What matters is that the CPI has been released, and that is the last data point that the Fed's going to look at before they make their rate decision by how much they're going to cut on the 18th, which is a week from today. So market estimates, market consensus here is that there's an 86% chance that they're going to cut by a quarter point. There is a 100% chance that they're going to cut. Okay, so the markets are basically saying, yeah, the Fed is for sure going to cut this time, and there's a very small chance that they do a 50 BP cut. Like I told y'all before, I think it's going to be a 25. There's two reasons for that. Number one, the outlook is not horrific. Okay, if it was horrific, I would expect them to do a 50, but it's not. I mean, it's not great, but it's not horrible either. Okay, that's the point I'm trying to make here. And number two, like I said before, I suspect they're going to do things a little bit differently this time. They're going to adjust according to the market and the economy's needs while trying to slightly be ahead of the curve. And do understand when I tell you this, that this is being orchestrated by powers that are greater than the Fed themselves. Okay, that's all I'm going to say about that. I'm not going to say anything more about that. But what I will say is that they are going to test the waters by doing a 25 BP cut first because they can afford to do so. Okay. So we go out to the further meetings here. November, you can see there's an increased chance of looks like maybe as much as a 50 BP cut. And then going out to December, so you got your 450. It looks like the highest probability 25 BP cut. So there may be some mixed cuts in here. Again, that wouldn't surprise me at all. The Fed's going to adjust according to whatever the economy and the market's needs are, so we can have that slow transition from Fed tightening into Fed easing, and from a tightening of the labor market to an expansion of the labor market simultaneously while bringing down inflation without causing a market crash. So I know this seems impossible, but this is what we expect to happen. So let's talk one more time about global liquidity index. So global liquidity index, again, this thing, generally speaking, rotates every couple of years. Why, I don't know. Maybe it has something to do with the midterms, or maybe this is just how the central banks control the flow of money and ensuring that they keep whatever their benchmark is for inflation. But the point I want to make here is that from 2018, okay, so you can see 2018 came down. We did actually have a major correction in 2018. 2019 went up, and then 2020, of course, we had the crazy pandemic. There was a 40% flash crash. 2021 was good, but the liquidity was coming down at that time, and then we had a major bear market in 2022. 2023, this thing is scaling up, and of course, the markets have been going up accordingly. So basically what this thing is telling me is that, in my opinion, this lines up perfectly with the narrative for crypto, that crypto is not supposed to have a bear market again until around 2026. Again, we took a look at the yearly charts. We'll do this on a later video on Bitcoin again, so those of you guys that didn't see it can see it. but Bitcoin usually has a bear market once every 4 years. Okay. So it happened in 2014, it happened in 2018, it happened in 2022. And if history repeats, it's not supposed to happen again. Excuse me, give me a second. So it's not supposed to happen again until 2026. And again, this global liquidity index lines up perfectly with that. So another thing I wanted to talk about here is Bitcoin versus the M2 global money supply. This is actually a new one. So why do I bring this up? Okay, so generally speaking, the M2 money supply expands when the Fed prints money. And what does the Fed have to do in order to print money? They have to cut rates. They have to drop rates, okay? So when they drop rates, by default, the money printer goes burr. You know what I mean? It starts printing money, and what happens when the money printer prints money? Well, guess what? We go on another massive Bitcoin bull run, okay? And you can see the inverse is true here. When the M2 supply drops, Bitcoin does tend to also drop. Maybe not as aggressively. It's not perfectly in sync, but you guys can kind of see that the generalized directions here are more or less the same, okay? So the BTC price is the black line, the M2 global supply is the blue line, and then the year-over-year growth is the green line. So when the blue line goes up, Bitcoin goes up. When the shade of green here goes down, Bitcoin goes down. You can notice that the blue line actually does go down with the line that's Bitcoin as well, although it's not so obvious. So again, basically from 2024 back here, you can see, I think that was, if I'm not mistaken, the Silicon Valley Bank, kind of, the Fed had to come in and bail them out. I can't remember if that was last year or in 2023, but regardless, the Fed tightening has taken some effect. And so you can see that now the M2 supply is starting to go up and the expansion of the year over year is starting to increase substantially. Okay. The point I want to make here is usually when this thing starts to increase is usually when Bitcoin starts to go up. And although it's obviously not perfect here, you guys can see when it went from a deep red into green, that was Bitcoin's bottom. And then you can see the M2 supply is kind of slowly just chopping around, more or less. Of course, the black line went up for the ETFs. There was that. But once again, I think that after giving it some thought, I think that likely the 75K that we saw was basically the market's pricing in the spot ETFs. But the price action from the actual crypto bull run itself has yet to take place, okay? So I do expect when the Fed cuts rates, we're going to see the blue line and the green shade go up, and Bitcoin's going to rise with it. That's the point I want to make here, okay? Because Powell did make it publicly known that when they were going to hike rates, they were also going to roll assets off of their balance sheet, which indicates that they're selling assets, which means that the M2 supply theoretically is going to go down. This green line is going to go down. Okay. So when they cut rates, I'm expecting them to do the opposite. Basically, when they cut rates, I'm expecting them to add assets to their balance sheet, meaning they're going to be printing money and buying assets, which is a boon for crypto and stocks. So now that we got that out of the way, the thing, actually, if we go over this here, you guys can actually even see that as the M2 money supply really started ramping up, you can see that when it was about ready to hit its peak was when Bitcoin took off to new all-time highs, okay? But, of course, the 2017 bull run was kind of a little bit longer to play out. So the point I want to make here is that the M2 money supply was going up as Bitcoin was going up. And if we see that, that's generally speaking a good thing, which is what we're seeing right now. So I want to give you guys a couple examples of why the options market is actually somewhat relevant to the crypto space. And again, this is kind of a one-off because usually, unless you're doing options on Coinbase, MicroStrategy, or the Bitcoin miners, there may be some outliers like Bito and some other ETFs out there that maybe you can do this on, but those are the only ones I can think of off the top of my head. Then options is like 90% for stocks, okay? But it does matter to some extent, and I'm going to show you why. So you guys can see in the last cycle, we did rip to the moon right about the end of the halving year. Okay, once we got across that bearish seasonality for this particular Bitcoin miner, it ripped to the moon. Okay, so by the end of the halving year, October, November, December, this thing took off like a rocket and ended up screaming all the way up to $40. Something I did notice on the charts earlier that I want to point out to you guys is this thing did actually. So there was a smaller 2019 bull run for Bitcoin. So I can actually show you guys this on the chart as soon as I find Bitcoin. Bitcoin, where are you, Bitcoin? All right, so here we go. So Bitcoin, you can see this little tiny bull run right here, right? Little small bull run and then a pullback into that pandemic. I call it a mini bull run because it wasn't actually the real thing, but you can see that during that time frame, CLSK did have a couple of moonshots. So this one happened kind of during the bear market, but then we had this one here, which was kind of crazy, and it was during that time frame that Bitcoin was going up. But as soon as that thing pulled back, okay, it kind of just, you can see the RSI went from being almost overbought to being oversold here, kind of going into the halving year, and then eventually slowly moved up. And so it kind of moved up into August, pulled back into September, and then October through December it ripped. We're seeing a similar thing on the RSI. Okay, it's slowly pulling back, bleeding over time, just like it did back then after that mini bull run. Again, I think this thing that we saw on CLSK and the Bitcoin going to all-time high was kind of like a mini bull run. Maybe not so much for Bitcoin, but I mean, it could be for Bitcoin. Bitcoin could still go to $200,000 or something like that. So, but this thing is getting very close to oversold on the RSI. That's the point I want to make. We actually got a double tap on the oversold on the daily time frame. And again, this video isn't about the miners, but I do want to show you this. There is no bullish divergence here, unfortunately, but the point is that this thing is massively oversold, and it is outside of the Bollinger Bands. Once again, usually when that happens, that means an immediate reversal or pretty close to it in the opposite direction. You can see it was overbought here, pulled back, oversold here, moved up, and so on and so on. But the thing I want to point out here is that we get this pullback into the end of the halving year, okay? So theoretically, in October, November, December, maybe even January, boom, this thing should be moonshotting to the moon, okay? So now let's actually go over the options chain, and I'm going to show you guys what I mean here. And what's so telling about this is the fact that there is significant volume at a particular time frame in which the vast majority of the options market has decided that, this is probably the best time to hit these strike prices or whatever the case may be. Okay. So I'm just going to pick like an arbitrary. Well, okay. Yeah, I guess I can't do this. I can't even go to the strike price on this one. So let's go out. So I'm looking for roughly about that $25 strike price. I just realized I'm actually not on the right one here. I want to do a buy call. So you guys can see that the strike prices don't really go that high, but as we get closer to the end of the year, they do get much higher. Okay, so November you got 23. October here you got 17.5 as the highest strike price, and again the options chain is going to show you, whatever is relevant to the current price. $22 in October. But if I go out here even further, see December. You can see the strike prices get much higher and much more spread out. So you got 23, 25, 30, 35. If I go out here to January, even more so, it goes all the way up to 37. But the thing I want to point out is this, okay? So if I go here to October, you can see the open interest for the highest strike price is only 19. And if I go to November, which again is theoretically when Bitcoin should be going to new all-time highs, again, we want to take a look at the highest strike price, 23,267. I can actually go down a couple. You can see there's not that much, 183, 108. Going down even further here, 341. 19. Okay, so you got a little bit more here. So basically, the options market is telling us they think that likely CLSK is probably going to be at $19 by November 15th. That's a lot of traders right there. Okay, that's 10,500 contracts times 100 shares. So you're talking over 1 million shares worth of volume right there. You got a little under 1,000 at 16. So you got quite a few here at 15, but the vast majority you can see is up there at that, I think it was that $19 strike price. So if I go out even further here, and this is what I really want to get to. So we go out even further to December, you can see that the open interest starts to pick up. Okay, so the highest strike price, 35, we have 4,300 contracts. 30, we have 2,300 contracts. And remember, each one of these contracts is times 100 shares. 3,200 at 25. At 23, you got 1,360. 22, 1,800. I can keep going on and on with this. Even numbers, for some strange reason, I don't know why, even numbers generally speaking tend to have a lot of open interest. So you have 7,300 here. So it's a lot of contracts, right? But if I go out to January, you guys can see that it's actually going to be substantially more. All right. So at the highest strike price here, we have 11,698 contracts. Let's just count out how many shares this is. Okay. So 11,698 times 100 shares. That is 1.169 million shares of CLSK. That, and again, I don't know how many people this is. It could be a few institutions. It could be several thousand retail traders. We don't know, okay? But the reality is you have massive implied volatility here, okay? And you have an open interest of 11,700 contracts, over 1 million shares. That tells me that there is a high likelihood that this could hit 37. So again, we have 5,900 at 35, 2,800 at 32. This one is massive. So we have almost 12,000 open interest at the $30 strike price. And then 27 is 2,150. And we, of course, have some additional trades that we'll talk about in a later video around this $25 area. So you can see 15,165 contracts at $25, 130% implied volatility. So that's a lot. Again, if I go over the actual number of shares here, because these are leveraged plays, generally speaking, that's what options is. 1.5 million shares. Okay, that is a lot. So the largest position that I'm able to see in these, well, okay, you have 22,000 at 20, but other than that, the second largest position I'm able to see at a higher strike price at 25 is 1.5 million shares. So the point I want to make is this, okay? The vast majority of traders or people that big money, smart money, whatever you want to call it, or a combination thereof, they all agree that January 2025 is going to be the best time for CLSK to go to these prices, okay? Around this particular time, around these particular strike prices. And that's one of the things that we base our trades on, okay? Look, market sentiment is important, okay? When the vast majority of people believe that something is going to happen in the markets, that's usually what happens, okay? So if you have, let's say, 10,000 people that are looking at CLSK at $9.28, and you have 2,000 of those people that choose to short the stock and say, screw that, I think this thing's garbage, it's going to $9. But then you have 8,000 people that are long in the stock and saying, well, I think this is a good dip buying opportunity. It looks cheap. I think it's undervalued. And they say it's going to $10. We have 80% longs, 20% shorts. Who do you think is going to win in that trade? It's going to be the 80% longs. Why? Because that's the market sentiment. That is what the generalized direction of all the vast majority of market participants, they're putting their actions towards that direction. That's essentially what market sentiment is. This is what you're seeing in the options chain, okay? So if I go to these same strike prices that we looked at that had the vast majority of contracts in January, you'll see a stark difference, okay? Massive drop off here in open interest, only 1,100 contracts at 25 for that March expiration. And if I go down here to 20, you can see it is still a lot, but not nearly as much as January. Okay, 2,200 versus, if I go back here to January, 22,000. Okay. Again, if I go to March, go to $25 strike price, 1,100. Go back to January, go to the $25 strike price, 15,000. Okay. So basically what I'm saying here is that because the vast majority of the volume is sitting around that January timeframe, most of these traders and investors that are looking to make money off of CLSK, they're looking at January 2025. What do we know about Bitcoin? Bitcoin, in theory, probably is going to hit new all-time highs in 2025. And why does this matter? Because Bitcoin miners are oscillators to Bitcoin. Okay, when Bitcoin goes up, the Bitcoin miners go up. That's usually what happens. You guys can see in the previous cycle, I'm actually going to show you this, and this is probably part of the reason why the markets expect this to happen. Again, the halving happened around the same time that the last halving happened. Okay, the last halving was in May of the halving year. This time it was in April of the halving year. So theoretically, the all-time high for Bitcoin should be around the same time, right? So Bitcoin broke all-time highs in December and had its biggest rally around that January to February timeframe. So you can understand why the vast majority of contracts for CLSK are almost exactly 4 years later from Bitcoin getting pretty close to topping out, right? So they're expecting basically the same thing on repeat here. So that's the point I want to make. And of course, I can show you guys this once again. Again, this is not a Bitcoin video, but I can show you guys this just to show you that the proof is in the pudding here. Okay. So last cycle, and even the cycle before that, we had 3 green years. Red year in 2018, 3 green years. And again, the white line, the white vertical line, is the year of the halving, which is the second year among the 3 green years. That's also the election year. And then in the 4th year in 2022, we had a bear market in crypto. And then we're in the second green year for Bitcoin right now. Okay. Which is also the halving year, which is also the election year. So theoretically, we should have one more year to make the 3 green years for the bull run. And then 2026 should be the crypto bear market year, which again lines up perfectly with the reversal of the global liquidity index. So what I'm seeing when I take a look at the options chain for anything crypto related is I'm looking for basically where is the largest amount of open interest possible, let's say going 12 months out, because it could be anywhere in that 12 months. And in this case with CLSK, it just so happens to be around the January timeframe that we're looking at. So end of the year, start of next year for Bitcoin. I'm looking for the largest amount of open interest, and I'm looking for a particular point in time, a particular expiration date, to kind of pinpoint where the market sentiment is for in terms of where the crypto bull run is going to go. And you could again use this for anything, for stocks or anything you're looking at, ETFs. Okay, just where's the largest volume? What is the expiration date for that volume? So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.